Thank you, Edmund, and good morning, ladies and gentlemen. I didn't realise I was going to be facing such a group of acknowledged academia here from all over the world, so I feel quite humble to be in front of you, so bear with me. Today, I'm just going to talk through the dramatic growth of Chinese tourism to Hong Kong since 2002. As far as Hong Kong is concerned, China has well and truly emerged some years ago. It's unprecedented, the sheer numbers of mainland visitors to Hong Kong. The rate of growth is phenomenal, and I'll talk through that a little bit more in a minute. And obviously, one can expect that as a result of this tsunami, if you like, of visitation these days, that challenges certainly arise, and again I'll highlight some of those that have come up in the last couple of years or so. I'll first present an overview of the visitation to Hong Kong since 2002 to give you a perspective of the relative impact of the Chinese tourists coming to Hong Kong over the last 13, 14 years. I'll talk through also some of the characteristics of the Chinese visitor to Hong Kong. I'll expand a little bit on the retail sector that's been hugely impacted by Chinese tourism, particularly at the high-end luxury brand level. And I'll try and articulate some of the challenges that have faced Hong Kong in recent times and what we're trying to do to overcome those as we go forward. I'm sure as you all know, Hong Kong is a well-established tourism destination globally, whether for leisure, MICE or business. I think we all recognise that its airport, its deluxe hotels, its service standards, the cuisine, the public transport are all world-class. Tourism is one of the Hong Kong government's 4 economic pillars and has been for 20 or 30 years now. Having said all of that, it still has much to do, and I think like all mature tourism destinations, it really has to be cognizant and recognise the increasing competition and the changing trends in consumer demands. But unlike any other mature destination, Hong Kong has this giant of a tourism market on its immediate doorstep. And the growth over the last 14 years has been exponential. So I'll just try and articulate that with this table. You can see back in 2002, we had a mere 6.8 million visitors from China. I can say a mere 6.8 now in hindsight. At the time, we felt that was quite significant. But 2003 was a watershed for Hong Kong. I hasten to add that's not because I joined the tourism board in January of that year. We actually had SARS around mid-March, kicked in from about the end of March to end of July, 4 months. There was absolutely zero traffic into Hong Kong. It was incredible. It was like a ghost town. And that had a huge impact on the psyche, I believe, of the Hong Kong population. Many of them didn't really necessarily recognise that part of their business was involved in tourism. And that 4 months of absolutely nothing, I think it's had a lasting impact. The strict cleanliness compliance processes that were introduced as a result, for example, at the wet markets, those people now 14 years on rigidly follow the guidelines every day of their working lives, and that's had a lasting impact, and I think really for the better for the tourism service and outcomes. But startling was the revival of tourism into Hong Kong, and by the end of 2004, just the year after, most of the major markets were delivering greater numbers than they had in 2002. Australia actually was the quickest and the most significant in terms of percentage rebound. It's an amazing thing that you put out a deal into the marketplace and the Aussies love a deal. So I don't know, Tammy was talking about 52% of people looking for other things and being more discerning, but I can tell you back in 2003, a very, very high percentage of Australians lapped up the deal and they came back to Hong Kong in a matter of weeks. But relevant to China, though, the 2003 SARS, the central government in Beijing introduced the individual visit scheme much earlier than had been planned. And that certainly provided the catalyst for accelerated growth from China, allowing individual travel from Beijing, Shanghai, and 8 Guangdong cities from around September of that year, and then they expanded it to embrace further cities through 2004. So you can see on this chart here, the visitation in 2004 soared to 12.2 million, and thereafter it was just exponential growth through to 2014, where we now get almost 1 million visitors a week. So Jeff, I know you get 1 million visitors a year, so there's a little bit of contrast there just to sort of get your head around that, and that's all into one city, one destination, that's about that size compared to the landmass that we enjoy here in Australia. So just think about that, 1 million visitors every week into a city. So you can expect that there's going to be some sort of ramifications as a result. Just looking at some of the characteristics of the Chinese visitor to Hong Kong, and some of them are quite surprising to, I guess, people that are not a regular student of our data. 45% of our mainland visitors only overnight, so that's 55% are day trippers. So they come over from the Shenzhen and the Guangdong province in their masses. So that's a huge percentage of our Chinese visitor. However, of the those that do overnight, they actually spend 3.9 nights in Hong Kong, which is exactly the same length of stay as the Australian market. Only 34% of our overnight passengers are first-timers. So 66% are repeaters, and many of those are multi-repeaters. And only 17% of the overnight visitors arrive in groups. That again may be a surprising factor these days, but I think it's therefore fair to come to the conclusion that our Chinese visitor to Hong Kong is quite mature, especially compared to, say, 10 or 12 years ago. Most likely they've been to Hong Kong, they know where they're going, they know where they want to eat, they certainly know where they want to shop. The Chinese visitor is certainly by far our largest per capita spend visitor, and 72% of their spend is on shopping. And that's just mind-blowing compared to any other market where it may be 25% or so would probably be the next highest per capita spend on shopping. So it just puts into perspective what they're coming to do over this last 14 years. Go back to the previous slide. I forgot to mention that 2015, and actually Wolfgang did point it out, that we actually incurred a 3% drop from mainland in 2015. And I think I'll be able to explain that quite easily in a minute. But that was the first time that there'd been a break on the traffic from mainland into China. Just a few figures for the retail sector. I've mentioned that 72% of their spend is on shopping. From 2003 to 2014, the retail sales went from 173 billion Hong Kong dollars to 493 billion. And that's a compound growth of 10% per annum. And the particular boom was certainly at the high end, the luxury brands. Many of the well-known branded shops that may have had one or possibly two outlets 14, 15 years ago, around sort of 2008, 9 and 10, opened up multiple outlets. So some of them have 5 or 6 shops, and they're not just little shops, they're significant. And when you go there, you have queues of mainlanders and allowed in at 20 or 30 at any one time. And it's, I think the 2010 and 2011 were the halcyon days, if you like, where the luxury market themselves grew at 18 and 25% respectively. Retail rents were going up at 20 and 30% per annum at that stage. And deluxe hotels were reportedly taking mainland visitors turning up for the weekend with cash and paying rack rate. So imagine turning up at the peninsula with your bag, you haven't got a booking, and you just hand over your money as to whatever the rack rate is of the day. So weekends that traditionally have been a little bit of a dip with business travellers not being around, going home. During those days, and still to a lesser extent now, those weekends were being filled by the mainland market leisure seekers. Then in late 2012, central government in Beijing introduced or initiated the anti-corruption campaign. And within a few months, the impact was apparent, and I think Wolfgang did allude to it. It was very much the high end. The real big spenders were sort of, the brakes had been applied, if you like. I just want to talk through the range of challenges that face Hong Kong over the last couple of years. And a number of them are quite understandable given the maturation of the mainland market. The central government were easing travel restrictions so that citizens were able to go to a wider range of countries. New airports were opening in China with direct air access into these places. So you can understand as they've been to Hong Kong 2, 3, 4 times maybe, they're looking for new experiences, new cultures, and they're going to take advantage of that. On the monetary front, the Hong Kong dollar has, which is linked to the US dollar, has strengthened. And then there's been other local currencies such as the yen has weakened. So again, the comparison in price has brought down, I guess, a degree of the competitiveness. In June 15 of last year, the government lifted some import tariffs on clothing, on shoes and skincare. So again, the price differential then of buying those goods in Hong Kong and in China was that little bit less. So I guess I'm talking about price does matter to people when they do buy a holiday, so I might be taking issue with what Tammy was saying earlier. I still think it's relevant in a lot of markets today. And of course, the anti-corruption campaign that I mentioned earlier, that was initiated three and a half years ago, has certainly had its impact as well. I guess most very significant on immediate numbers falling, though, were the visa issuance for our neighbours over the border in Shenzhen. a city with a population of 7 million. Their visas, the multiple entry visas, restricted them to one visit per week, rather than allowing them to come every day if they wanted. And that was really as a result of tension caused by citizens of Shenzhen coming over and what we called the parallel trading, where they were buying up, I guess, essential goods such as baby milk powder in bulk. And so by issuing once a week only visa, I guess is starting to cut back on that opportunity for them. Hence our day trip numbers, if you like, has dipped considerably, hence the 3% drop being a large part due to that. The Occupy phenomenon that you might remember in Hong Kong of late 2014 also caused some tension with mainlanders. So you can see that various factors there, whether some of them are part of government policy, some are political unrest, if you like, and some are sort of external factors such as exchange rate, have all sort of come to, I guess, the surface this last 18 months, 2 years, that's had an impact and had a break on what was that exponential growth that we've been experiencing for the previous 13 or so years. Maybe industry may not necessarily agree. I think maybe it's not such a bad thing, that it gives time to reflect and review where Hong Kong needs to be going forward, whether it needs that diverse portfolio of visitors. I think it realizes quickly you can't rely on one market, and I think that's probably a lesson for all markets, destinations, that you have to have a diverse portfolio. In terms of activity within China, I think we've recognized a couple of years ago that consumers, whether from China or from other parts of the world, are looking for the experiential part in their trips overseas. And so we rolled out a year ago My Time 4, which in terms of trying to strengthen the destinational appeal, allows a lot of flexibility in promoting different experiences to different segments around the world. So in China, for example, where shopping is still important for Chinese coming to Hong Kong, I think 72% in a recent research indicated that they felt Hong Kong was still a shopper's paradise, despite some of the barriers that I put to you just now. So that's still important, obviously, but we need to diversify our delivery of experiences for the more discerning Chinese now that they're getting more mature. And believe it or not, we also look for dispersal, even in a small place. I know from my time at Northern Territory in New South Wales, working in Asia, getting them out of the major cities was a key part of our activities. Getting our visitors, whether Australians or Chinese, to get them beyond Nathan Road and Central and Causeway Bay. We want them to get into other parts of Hong Kong. So we have a drive like that, like many other tourism boards. And we have to get the message that it's safe. That's important, very important to Chinese visitors. It is to virtually all markets, but particularly so in China. We're obviously accessible, so we need to promote that. And so therefore we're good for a short break. They are looking to places like Europe and North America and Australia for their longer haul experiences, but those sorts of breaks are probably only once a year perhaps. Hopefully we think that Hong Kong can certainly be a regular in terms of a short break. And the family sector is a new one that we're certainly looking to take advantage of now that there seems to be significant growth in that particular segment. So in winding up, I better wind up very quickly. been pretty dramatic, exciting times this last 12 or 14 years for Hong Kong. We need to continually evolve, recognize that it is a competitive world, develop our infrastructure and our attractions. We have to refresh ourselves in terms of our positioning and marketing strategies to stay relevant and attractive. So I'll look forward to answering your questions a little bit later, and thank you for your time. Thank you.